Stavros Tousios from M4Markets. Welcome to another daily analysis video, guys. I want to do GBPUSD and also New Zealand against the USD, the Kiwi, because both have actually come to a sort of a point in time and price that some interesting patterns are possibly likely to complete, and that's why we are here. For the pound specifically, we have been getting these divergences for a while now, like so many different signals between the RSI and prices. The latest one being, of course, this one over here and over here. Now, if you recall, we said that pound probably leads euro dollar in this particular phase of markets, and we also looked at this potential triangle here, which has played out. And since then, we have started to move higher. Now, if the assumption, of course, is correct, and this is indeed the triangle, that means that, we've got something like of a move to the upside from here, then there, over here, and we are already overlapping with the previous swing, which typically suggests that we are likely to get a wedge. Now, this wedge is not like finished, but and this is due, of course, to the structural differences between the two waves going to the upside. But we could actually see another wave to the upside, okay, which would suggest that perhaps 126, 127 is going to be a level where we would see either a reversal in the short term, medium term, or a simple like pullback, perhaps down to 123.50 or so, and then continue to the upside. Okay, if we go down on the 1 hour, I just wanted to show you again that pattern over here, because you got the triangle over here, right, which ends, by the way, here. It's 5 waves move, and you got this move over here, and then this move over here, and then you have this move over here. Someone could argue that this is a done case because we have 3 peaks and 2 troughs, with the second one, of course, being a higher low than the first one, and this is the wedge pattern. Someone could argue, but I'm not sure that's the case, because I typically want to see the structures having the same sort of amplitude. That means that is okay for me. I would probably want to see this and something like that taking place, because this would imply that the ratios, time and price wise, are matching between the different structures. Okay, when it comes to Kiwi, we have come down to 38, an attempt here, a second attempt. We've actually bounced nicely here, and that move to the upside looks more impulsive indeed, better than this case at least. However, why we are here is that as we come up, we've actually reached the channel of this upside trend. And this time around, we have reached it from the bottom, which means that this, if retested, it's retested actually. If rejected, it could turn this into a resistance instead and lead to further downside. So, as we go up, it is important to see whether we can indeed cross above the 50%. If we cross above the 50%, which pretty much would imply we're going to break inside the channel, then 63.77 and then 64.43 are the next levels to pay attention to in the short term. If we fail to cross above 50, then of course down around 62.50 or so is where we could see some support. That would be a short-term pullback, okay, which would come or could come whether we go back inside or whether we follow the downside trend towards the 0.62 or so. But if we assume that we're gonna start correcting now, it would be also important to stay above 0.6217 for the short-term bias to remain to the upside. Now, we don't see an evident or such a strong signal right now because we see some flatness on the RSI. But let's not forget the second leg to the upside would provide us a much better hidden bearish divergence. And from there, we can start to look for signals, including the RSI, of course, that might potentially bring a short-term move to the downside.